Hello and welcome to my channel. I am Robert and I talk about everything automated algorithmic trading, or simply algo trading. Today has been an insane day in the trading market. With fears of tariffs and all of the armchair idiots running amok, it has caused a very interesting anomaly, a very large gap where prices have dropped dramatically. Overall, for my style of trading, this is very good, but it could have just as easily be very bad if you don't have a worst case scenario plan in place. We can see just how much of my trades sold off just on this chart alone. But we're going to actually go through and look at several different components as we continue to look at just what this really means in the trading context. The news cycle is literally loaded with fear-mongering that is, quite frankly, ridiculous. It's very simple. Your trading must always have a worst-case plan. If it doesn't, you're gambling. If it does, what you see on the chart with this gap doesn't matter, because your trading style will automatically handle it and it will simply be another day. That being said, always think about your risks. That should actually be the first thing you think about before you ever start trading, is the level of risk that you are taking on. All of the people crying about being liquidated are because they were over leveraged to begin with, or didn't take into account a worst case scenario. Anytime you deal with political posturing of any level, you have a risk of the market doing something weird because of people fear-mongering and selling that fear to make money. And what you're looking at right here is just that. A bucket load of fear-mongering that made a lot of people rich and a lot of people broke. Proper worst-case scenario planning prevents this kind of nonsense. So let's get into other parts of the charts and really take a look at this whole situation. For my own personal trading, this is my profit curve just for today. And this whole section right here is all because of fear-mongering in the market. Political posturing, back and forth rhetoric, and nonsense. I made quite a generous profit today from it. My typical 19 to 23 cent position sizes did quite well. And I'm going to demonstrate that from the actual trading account in a few minutes. But here you can clearly see the impact of just what that meant, that we just saw from the chart. That gap translated to a massive number of my positions being unloaded in a profit. Now, gap trading isn't always this profitable. I've talked about this in previous videos. When you trade the gap, quite often, gaps go against you. And when they do, they can hurt. They can trigger stop losses just as easily as they can trigger profits. And that is why you absolutely must plan for the worst case. You'll find plenty of videos flooding YouTube about hunting these gaps and profiting from them only. If it was that easy, everybody would be rich. Gaps are nothing more than market chaos. Some weird political stunt that does some weird fear-mongering or greed-mongering, depending upon which way you want to look at the market. In the case of my trading, I got lucky. It went in my favor. But if I was unlucky and it went against me, it would not have mattered because my trading technique takes into account exactly this kind of weird situation. It doesn't matter if the market gaps or not in my trading techniques because whatever is going to happen is going to happen and the algorithm is going to do what it's supposed to do. That's the whole point of algorithmic trading. Take out all of the human emotion, all of the incessive rhetoric, and all of the nonsense of politicians and armchair idiots blowing their mouths off, making a situation completely blown out of control and out of common sense. So let's get into the actual trading account and look at exactly how this morning has affected real-world trading. Okay, now that we are in my live trading account, we can really take a look at the market in terms of all of this overblown rhetoric since this tariff nonsense started, which will be roughly right about in this area. We can see how the market has just gone downward ever since. Now, I had plenty of different trades here, which we'll look at on the left-hand side in a few minutes. But for now, let's talk about the impact of what we're looking at. Here is what I'm currently holding. And you'll notice that my last position only has 27 units left. You can clearly see that I started out at 170 units for my first position. I have burned off literally 150 units just about from the sell-offs. So my last position has almost been completely burned off. And at the rate the market is going, I would say probably by Wednesday, my last position will have been burnt off, if not sold off. But again, that's part of my worst case plan, to always look at every trade and take a tiny loss for every profit. Reduction is a critical component of my risk management strategy. But we can see very clearly just how big today's candle is, and if we were to go to one of the lower time frames, you would even see the gapping. This is the biggest issue of trading that people really need to focus on. Market instability and unpredictable circumstances can cause absolute chaos if your trading technique doesn't really consider every possibility. It's not that hard to build a worst case scenario situation, and usually all it takes is just focusing on 1% of your account at risk. That's it. 1%. That's all I ever really risk. 1%. So by doing this, by limiting how much I actually have at risk, by burning off old positions for every single profit, by keeping my position sizes low, I have a consistency of profitability that keeps my account stable. I don't have to worry about how my account is impacted because I've counted out every single position that I will ever take. Every single position, every single price gets counted long before the bot ever starts trading. So let's take a look on the left-hand side of the actual results of my activity. The actual profits I've made from today. Now what we see here is normally This is my normal amount of profit. 19, 18, up to 23 cents is my typical range. Not a lot per trade. Not a lot at all. In fact, it's very simple, very modest, but it does an exceptional job of hedging my risk. But now let's go back and actually look at the gap. $0.18, 16 cents, 20 cents, 23 cents. As you can see, the consistency of my profitability. But here we have $1.21. Now think about that. How much more drastic is that compared to my average? That is directly in relation to the gap. Let's keep going. 17 cents, 18 cents. So you can see just how well those gaps work in your favor when they are in your favor. And you can see very clearly my trading along the way. So as we continue looking back at the profits, and you can see my average trade versus the gap trade, 38 cents, 66 cents, 93 cents, $1.30, $1.74, $1.97. Think about the impact of that gap from an average of 20 cents to $1.97 for a single position. Gaps are wonderful, but they can be equally devastating because that could easily have been a $1.97 stop loss. You have to focus on the bigger picture of trading. Risk. You must always weigh the risk of every single trade you take. There's no exception to this. Gaps will work in your favor. Gaps will work against you. Gaps can bring you money. Gaps can cause you to lose money. But in the end, they always balance out if you take a worst case scenario approach in your trading. I cannot emphasize that enough. Today alone has liquidated hundreds of millions of dollars because people were over leveraged. They didn't take into account that the market was going to do something completely off the wall weird, or that a bunch of armchair idiots were going to get on Twitter, Reddit, or some other fancy social media network and start blowing their mouths off. The fear-mongering over this entire situation is obscene and insane. There's just no way of describing just how crazy this process is. But you have to think about your trading. You have to focus on the details of your trading method, the technique, the circumstances, how and when you take your trades, whether you average into a position or whether you liquidate and sell off individual positions. Everything has to be planned out ahead of time, carefully and methodically. Otherwise, you are just gambling. If you gamble, you lose. If you plan out how your trading approach is going to work, and you spend the time to study it in demo accounts, you can develop a robust, clean, clear, and concise approach that guarantees, with a reasonable level of accuracy, a good amount of profit. 19, 20 cents a position doesn't seem like a lot, but these tiny positions add up over time, and the long-term effect of it is they could actually be more stable than taking larger positions. It's all about risk. Risk is everything. And if you aren't prepared for it, you are going to be wiped out. Always think about your risk. That is the very first step of trading. Always. So as we navigate this market throughout the rest of the week, don't be surprised if it continues with this aggressive and crazy insanity. Whether Trump is using a madman's approach for diplomacy or he is just a madman on the loose, it doesn't matter. If and only if you have taken into consideration a worst case scenario to your trading. Let me know how your trading has been doing. How has the market been for you? For me, it's been quite generous and very profitable, as I've demonstrated. But that isn't always the case for everybody. Share your thoughts. Leave a comment. If you're not subscribed, please subscribe to this channel. But more importantly, if you found a value to this video, please hit that like button. It really does help my channel grow. Thank you for watching, and until next time.